Now, friends, tax is a very vast subject, very, very difficult to cover in just one or two videos, but we will give you a gist of it. Now, if you see, tax on salary or income is based on certain slab rates. Income up to 2.5 lakhs is not taxable. Income above 2.5 lakhs up to 5 lakhs is taxed at 5%. Income above 5 lakhs and up to 10 lakhs is taxed at 20%. And again, income above 10 lakhs or so is taxed at 30%. But that's not all. There's also a difference between the old tax regime and the new tax regime. Well, the maximum tax rate on personal income in the USA is about 51.6%, pretty high compared to India, which is about 30%. So, income from buying and selling of shares is taxed under capital gains. These are classified as short-term capital gains and long-term capital gains. In case of short-term capital gains, the shares are sold within 12 months of purchase. And these gains are taxed at 15% on the profit and are calculated as the selling price minus the expenses on sales minus the purchase price. Now let's come to long-term capital gains. In case the shares are sold after 12 months of purchase, they are considered as long-term capital gains, tax which are taxable at 10% without the indexation. But if your long-term capital gain tax is below 1 lakh in the financial year, as in fact we had discussed in one of our videos, in that financial year, it's not at all taxable. Well, if you look at crypto, in India, one of the most talked about markets nowadays, which is subject to a 30% tax, along with an applicable surcharge and a 4% cess. So I've just discussed the tax slab above, and along with that tax slab, a surcharge of 15% is levied if the total income exceeds rupees 1 crore. If you have more questions, ask us in the comments.